Hello kind people of YouTube and welcome back to another video. Today, as always, we're going to take a quick look at the crypto markets before talking about a bunch of stuff that was in the news today, reading some articles together and then talking about it. And as you can see, a lot of tabs open again today, so let's just jump into it by refreshing CoinMarketCap right here. We see the market recovery that we've seen for a couple days now seems to be recovering at a relatively slow but stable pace. If you remember yesterday when I made my video, the market cap was just under 206 billion total for the crypto markets. Now it's at 206.569 billion, so that is about 1/4% up over yesterday, with 24-hour volume and Bitcoin dominance at roughly the same point they were at yesterday. We see some coins significantly outperform others here, though most of them are 1% up or down roughly. Exceptions here, Bitcoin Cash, we will talk about what happened there in a moment. Stellar doing very good, 4% up, and aside from that we just see relatively minor movement with most tokens. The other big exception here is BAT, Basic Attention Token, up 14% over yesterday, and this is actually rather significant. I believe they were just at the number 42 by market cap the other day when I made my top cryptocurrencies to buy right now video. I included BAT in my top 10 there, and I'm pretty sure it was on number 42 when I made that video. Now it has clawed its way up all the way to number 30 among this this gain in value, and very close to 29 here. The difference to Lisk is only about 8 million in market cap. So that is the major movement we see here. Let's look at some analysis, and let's start with some long-term. There's some discussion around if we might be dealing with a different support line now, a more longer-term one, but this article can outline it a lot better than I ever could because I'm not a technical analyst, so let's just read it together. All these articles are of course always linked in the description, and the description also has some other stuff in it. If you'd like to support this channel, there's a way to do that, Sorry, I'm trying to talk way too quickly today. The description has a bunch of other stuff in it as well. If you want to support the channel, there's ways to do that. If you want to follow me on social media pages, also in there. And of course, all the links to articles we're reading. I'm going to try to speak at a normal pace now so I don't mess up that much. With the number of strong support levels increasing for Bitcoin, the Bitcoin bears are facing an uphill battle. The latest addition to the list is the support of the trendline connecting the November 2011 and August 2016 lows, currently at $5,830. Up to October 31st, the two key support levels were the 21-month EMA and the trendline drawn between the June and August lows. In particular, the 21-month EMA was the level to beat for the bears till last month, meaning a close below that support would likely have revived the seller from the record high of $20,000 seen last December. While the 21-month EMA still remains a crucial support, the new make or break level is the 7-year-long rising trendline. That's because the trendline support, which was located around $5,300 last month, has now moved closer to the current price and is seen rising above $6,300 in December. Hence, it may now be incorrect to call a break below the 21-month EMA a sign of a bear revival. At press time, Bitcoin is changing hands at $6,330 on Bitstamp, representing a 0.5% drop on a 24-hour basis. The main thing to take away from it here is that if we're looking at the really long term, if we're drawing a line between the 2011 low and the 2000, I believe it was 2014 or 2016 low, you can see that line here. If we're drawing that straight line, then Bitcoin is just about at that price, slightly above it now, and that line is still very much going up. We see a beautiful movement here, the massive bear market from 2014, and then the massive one from the end of 2017, and then the crashes after. And last time it followed this line exactly and then shot up again. Of course it followed this line because this line was set at the low. But this is now the support that is set to either make or break if we're moving into a bull market. So different numbers to watch than usual. I'll just leave you guys with that. But let's see what happened to Bitcoin Cash, which of course we just talked about jumped in price significantly. And that is because Binance and Bitcoin.com have come down on one side of the hard fork discussion. Bitcoin Cash is about to hard fork in, I believe, 2 weeks. And there are two opposing camps there. and Binance and Bitcoin.com both came out for one of those, and that seems to have finally given people some more certainty about what is going to happen there. It appears that that side of the hard fork discussion is the one that will be majority supported now, and let's read this article. The Bitcoin Cash price awoke from its slump on Friday, mounting a double-digit percentage rally during the early evening hours after two major cryptocurrency firms revealed their plans for the Bitcoin Cash hard fork that is scheduled to take place in less than 2 weeks. Like most of the large-cap crypto market, Bitcoin Cash had been in recent weeks uncharacteristically stable, and the fourth largest cryptocurrency spent most of Friday morning trading near $425. Shortly after 12:45 UTC, however, the Bitcoin Cash price leapt above $450 in a matter of minutes, ultimately touching $470 before falling back to the present value of $465. The surge translated into a daily move of more than 10%, ranking Bitcoin Cash as the second best performer among the top 100 cryptocurrencies, trailing only small-cap project Ravencoin as of the time of writing. The rally showed some correlation with two separate announcements from large cryptocurrency firms Bitcoin.com and Binance, indicating how they will be approaching the impending Bitcoin Cash software hard fork, which, as CCN reported, stems from deep-seated disagreements about what technological upgrades should be activated on the network and threatens to sever the Bitcoin Cash blockchain into multiple competing versions. In their announcements today, both Binance, the largest cryptocurrency exchange, and Bitcoin.com, the Bitcoin Cash promoting website owned by Roger Ver, indicated that they would support the Bitcoin Cash version promoted by development team Bitcoin ABC, not the alternative client released by Craig Wright-linked firm nChain and mining pool operator CoinGeek. Bitcoin.com stated outright that its mining pool, wallet, block explorer, and other services will run the fork-compatible Bitcoin ABC client. Concurrently, these services will the latest client from Bitcoin Unlimited. Well, there's some error in this sentence. Let's just skip this one. Binance's announcement was somewhat more opaque, stating that it would support the Bitcoin Cash hard fork but did not address what software clients it would support. Crucially though, the announcement referred users to the official announcement for the hard fork and linked to the bitcoincash.org GitHub repository, which lists the upgrades that included in the ABC client. CCN has reached out to Binance for clarification on whether they will exclusively support this Bitcoin Cash version. While these statements do not completely erase the uncertainty surrounding the November 15th fork, they do suggest that if the major companies that provide Bitcoin Cash infrastructure continue to line up behind ABC, these so-called hash wars might prove to be less ugly and disruptive than they could have been. So the takeaway here, at least in my opinion, is that it is looking pretty clear-cut now that the Bitcoin ABC hard fork of Bitcoin Cash is the one that will find mainstream support. After we see Binance and Bitcoin.com coming out in support of them, Binance is more tepid support, but to me their statement makes it clear that this is the version they're supporting, because otherwise why would they have linked to the GitHub page associated with it? So that is pretty clear cut. Other major exchanges and crypto websites will probably follow suit and get behind this version as well, because by now, after you have two large players in the market release statements like this, they have pretty much who comes out first with stuff like this influences everyone else. The moment you already have two large companies coming out in support of this, you have pretty much already won the battle. And if anyone else now wants to support the other version, they will have to answer to why they are not doing the same thing that other large exchanges are doing, why they are doing the incompatible thing that most other websites and exchanges will probably be supporting this version of the hard fork as well. Continuing on, I always like to talk about Ripple. Ripple executive XRP is Bitcoin 2.0, it's like Bitcoin on steroids. Ripple, the company that created XRP, has been one of the big companies leading the pack in terms of development of blockchain-based products. The products are focused on providing solutions to the many financial institutions struggling with the shortcomings of the current system. Top among the issues facing banks is transaction processing speed. Ripple's technology aims to tackle that problem, and that's where XRP comes in. Ripple's customers, especially the banks joining the RippleNet, use XRP as the base currency for funds transfer. However, Ripple has made it clear that the company and the cryptocurrency are two separate entities. And we need to quickly correct here. It's not necessarily the base currency for fund transfers, but it is the liquidity currency that is being used as a medium. So what is happening is essentially, if you want to send money from one country to another, in country A, let's say you're sending $1 million from the US to Mexico. That means in the US, you are buying $1 million worth of XRP, you are sending those XRP to Mexico, and then in Mexico, these $1 million worth of XRP are being sold on an exchange for the equivalent amount of pesos. So that is what they mean here. In fact, as the company's chief market strategist Cory Johnson puts it, XRP can survive just fine without Ripple. Cory was speaking in a recent fintech-focused podcast interview. In the interview, Cory Johnson had a few very important facts to put across. First, he expressed his dissatisfaction with the traditional systems. How come people can share memes, documents, and even emojis so fast and easily, but they can't do the same with money? He noted that such issues are the core problems that Ripple wants to solve for the world. With Ripple's technology, people can send money just as instantly as they can send and receive text messages. Cory Johnson didn't mince his words in proclaiming XRP as comparable to a more advanced version of Bitcoin. XRP is much like Bitcoin, but it's faster, its network is more scalable. I'm really being awful today. More scalable, and its transaction fees are negligible. In his own coined expression, Cory referred to XRP as Bitcoin 2.0. In a recent tweet, Cory even took issue with Bitcoin's alleged carbon emissions in mining operations and its massive power consumption. These are not alleged carbon emissions. The exact amount can't be pinned down because no study can really get to an exact number. But there are very high carbon emissions associated with Bitcoin mining. The only question is how high. And its massive power consumption. Since there's no XRP mining, the crypto excels better than Bitcoin in that respect. However, Cory doesn't really see XRP as being in competition with Bitcoin. He sees it as a new fund transfer system putting up a fight against SWIFT. SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication, a system that Johnson says has failed in its mission to provide fast and reliable money transfer services. Since Ripple has partnered with banks and uses XRP as the base currency, there arises an issue in regulatory policies. For one, Cory Johnson isn't happy about the sluggish manner in which the authorities are dealing with the challenges facing the crypto world. In his view, the authorities need to be more active and fast in streamlining the industry and enforce a more legitimate and secure crypto environment. He cited scams, money laundering, and criminal activities as some of the more serious issues plaguing the industry. However, Cory noted that Ripple's strategic partnership with financial institutions has put in place concrete procedures to ensure adherence to regulatory policies. That was a long one. Some of these include clear protocols in customer verification and safeguards that prevent laundering and other criminal activities within the network. I like how the Ripple people, especially Cory Johnson, they really do the press rounds. They do a lot of interviews, they talk at a lot of conferences. They make themselves accessible to the press, to podcasts, to crypto pages. That is, I think, exactly what they should be doing, what any large company that is trying to create a product that they want to take over a market should be doing. And reiterating here that Ripple's technologies are very much technologically advanced over Bitcoin. Now, I know a lot of people will be offended at this Bitcoin 2.0 thing, but you have to keep in mind, Bitcoin was a first-generation cryptocurrency. Bitcoin pretty much invented what a cryptocurrency is. And it codified what a cryptocurrency is. And it really, really innovated in that regard. But that also means that it being the first, newer generations of cryptocurrencies have just completely outmatched its technology. Newer blockchains, newer tokens that innovated on blockchain technology, on the technology that Bitcoin pretty much invented, are objectively superior in many ways. That is just a fact. And so calling any newer cryptocurrency Bitcoin 2.0, that isn't as much an insult to Bitcoin as it is just a statement of fact about the technology. These newer blockchains, these newer tokens, they took the technology put forward by Bitcoin and they innovated on it in meaningful ways, they progressed it, and they are very much blockchain 2.0, and calling that Bitcoin 2.0 is, in my opinion, just a factual statement. That doesn't necessarily mean you think it will take Bitcoin's place in the market, or that they even have the same goals as Bitcoin, but just technologically, if you just look at the underlying code, at what they can do, that is very much what is happening there. Tokens like XRP, not just necessarily XRP itself, but tokens like it, are very much Bitcoin 2.0. They are faster, they are more scalable, they are cheaper, they have more technological capacities on top of them. That is exactly what I think when I think Bitcoin 2.0. So I think he's just right on the money here. This is an accurate description. But he does point out that they don't see themselves as being competition for Bitcoin. That makes sense, of course. XRP's goal, or rather Ripple's goal with the XRP token on their technologies, is to go for one specific market, and it's capable of doing other things. But the core thing that Ripple is going for is the monetary transfer market, especially the international monetary transfer market. That is not at all what Bitcoin is aiming for. Bitcoin is seen by many as either a currency that is ultimately, hopefully, going into daily use, or as a store of value, and XRP isn't supposed to really be either of those. So they're not in direct competition, but it's perfectly fair, if you're just talking about them technologically, what they're capable of, to define it as Bitcoin 2.0. Continuing on. We talked a lot about Tether on this channel, a lot, especially in the last 2 weeks or so, after it lost parity with the US dollar, and it still hasn't quite been able to restore that. And now, the other day, they released a letter reacting to criticisms that they hadn't really proven that they're backed by US dollars. They released a letter from their bank claiming that they have a certain amount of money in their bank account, and let's just read it. There's this article goes into what the letter said, and then talked to some experts about the letter and got their opinions. As with any communication from Tether these days, a letter from Bahamas-based Deltek Bank has seemingly been passed as closely as a passage from Holy Writ. Commentators on Twitter and elsewhere picked apart every one of its fewer than 100 words, including the non-committal wisp of a signature, which inevitably became a meme and the subject of parody, and even the document's metadata. In releasing the letter this week, the controversial stablecoin issuer was trying to allay concerns about its banking situation by confirming its previously rumored relationship with Deltek and showing proof that it has enough money to fully back the Tether tokens in circulation. Specifically, the letter confirmed that at the close of business on October 31st, the portfolio cash value of the account was this, $1.8 billion. Keep in mind here, just days earlier they had put, I think it was $500 million worth of Tether out of circulation, which makes you wonder, did they have that much money in their account a couple days earlier? Did they have 500 million more? Or did they move them out of circulation so they could now prove that they actually have enough money because they didn't before? That was my first big question. There are more big questions about this coming up, but this was my first because I'd assume that they didn't just get rid of 500 million US dollars in the last couple days. So either they get rid of 500 million US dollars in a couple days, or they didn't have enough US dollars backing their Tether tokens a couple days ago, and they moved them out of circulation so they would have enough. Anyways, back to the article. That exceeds the circulating supply of Tether, which is currently 1.7 billion according to CoinMarketCap, apparently indicating that the company is complying with its promise to hold $1 for every Tether in circulation. But aspects of the letter attracted scrutiny from the crypto commentariat, some of whom have long harbored suspicions about Tether's claims to fully collateralize US dollars. Not helping to clarify matters, when reached by CoinDesk on Friday, a Deltek spokesperson would neither confirm nor deny the relationship or the authenticity of the letter, citing legal and regulatory restrictions. However, later in the day, Deltek chairman Jean Chalopin, I probably mispronounced that, very sorry, messaged CoinDesk saying the following. You contacted us a couple of weeks ago and asked a confirmation that we would not give you as restricted by law, but Tether came public with an announcement and I wanted to make sure you saw it. Sorry we could not be more helpful before. As you know, the banking sector is strongly regulated and we have to be careful in matters of communication. He included a link to Tether's announcement. So CoinDesk spoke to several industry lawyers to find out what, if anything, can be drawn from Deltek's brief and cryptic missive. Without any liability. This sentence from the letter in particular raised eyebrows. This letter is provided without any liability, however arising as on the part of Deltek Bank and Trust Limited, its officers, directors, employees and shareholders, and is solely based on the information currently in our possession. Now, to me personally, this just sounds like the kind of legalese that you would always put in letters like this just to pretty much cover your ass, but they have the take from a lawyer on this. Preston Byrne, a technology consultant with Tom Wren LLC, said that the disclaimer calls back to Hadley, Byrne and Co. Ltd. versus Heller and Partners Ltd., a UK legal base from the 1960s, a case not base. In the case, the House of Lords ruled that a bank which made a similar disclaimer could not be held responsible for actions taken as a result of a letter it sent. The Bahamas is a common law jurisdiction, which means it may give persuasive weight to English precedent, Byrne explained, adding, Hadley-Byrne is an English case concerning the inadvertent assumption of liability by a bank to a third party as a result of public statements made by the bank to a third party and the effectiveness of a disclaimer in discharging any obligations that bank might owe to that third party as a result of those statements. In other words, there is case law precedent for what one entity might owe another. Is the case relevant? To an extent, but the bank does not have a fiduciary relationship with anyone but Tether, said Matthew Gertler, an attorney who recently joined Reserve, the issuer of a rival stablecoin. While Tether's decision to publish the letter might indicate that it's for public consumption, readers should not assume they've been given any sort of legally meaningful guarantee of anything, since they're extraneous to the Deltek Tether relationship. So takeaway here, this letter does not guarantee anything to anyone but Tether themselves. If you're acting in any way based on this letter, they are not liable for it. Speculation also centered on the fact that there is no person's name attached to the letter and that the signature is just a curve. But Gertler argued that the lack of a name or legible signature is not necessarily an issue. Certain people and companies are able to write letters on behalf of the company, he continued. The signee is merely someone who has authority to write these letters on behalf of the bank. I do not see this as unusual, he explained. The attorney's CoinDesk spoke to also stress the importance, from a legal perspective, of the letter's intended audience who likely did not require an individual's name. The letter is written to Tether for Tether, Gertler said. The bank is basically saying that if it is wrong and Tether suffers a loss, Tether cannot sue the bank. I should note that anyone else who relies on the bank letter cannot go after the bank because the letter is for Tether and no one else. The language of the letter covers it in case there was a system or other error that caused the amount to be misstated, he said, adding, this is lawyers doing what lawyers do, so covering your ass essentially. Another focus of social media exegesis was the phrase portfolio cash value. To some, that appeared to be an artful way of saying that the firm is not strictly complying with the language in its white paper, which says, each Tether unit issued into circulation is backed in a 1-to-1 ratio by the corresponding fiat currency unit held in deposit by Hong Kong-based Tether Limited. It did not escape notice that the letter was addressed to an office in Taiwan, not Hong Kong. As one user pointed out, portfolio cash value potentially leaves room for assets that aren't US dollars, perhaps even cryptocurrencies. An attorney who spoke to CoinDesk on condition of anonymity, citing onslaughts of spam and other negative reactions suffered by those who criticized Tether publicly, addressed this point. Regardless of whether I'm a purchaser or investor, who in their right mind would rely on this letter anyways? What people want to know when they buy Tether is, are there dollars on deposit? And this doesn't say anything about that. It says it has 1.8 billion in its account, but it doesn't have to be in cash. It says portfolio cash value. I don't know what that means. The balance could even be money that was loaned to Tether for a day, the attorney added. Gertler proposed a more generous interpretation. More likely the portfolio is of various fiat currencies of different variant bank accounts, he said. If it's only US dollar, the bank letter is probably a form letter that contemplates various fiat and bank accounts. Now what I'd like to add here is that even if it's 1.8 million US dollars worth of other currencies, that is not quite what they're promising when they're saying that they're fully collateralized. They are saying that they have 1.8 billion US dollars, not something else equivalent in value to 1.8 billion US dollars, but 1.8 billion US dollars. Having anything else in that portfolio, which doesn't come out clearly from this letter if there's anything else in there. If they have other types of assets in there, if they have stocks in there, if they have other currencies in there. But to me, saying you have 1.8 billion US dollars collateralized means you have 1.8 billion US dollars collateralized. Anything else would be like having a stablecoin tethered to gold and saying you have it collateralized in gold, and then it turns out you don't actually have gold. You have the equivalent value of soybeans. That can have the same value, but it's not what you're promising, and it moves in a different manner to the thing you're promising. So they should This letter is not, well, we don't have to read the rest of this article. It continues for a bit more, but you can read it yourself if you want to. The takeaway from this is Coinbase, sorry. Tether is trying to calm people down, but they're not at all doing it with this, and they continue to not let anyone properly audit them. They have promised in their white paper that they would be professionally audited from independent third parties. None of that is happening. Now all we're getting is a letter from their bank that is also worded in a way that leaves so many questions. Is all of that actually US dollars? How much of that is there on other days, because we only get the value from that one day? Did they just take out a loan and instantly pay it back? Some of that money could not even be theirs. Some of that could be loaned out to them. How much was there a couple days before when there were 500 million more Tether in circulation? Did they actually have 500 million US dollars more? Or did they take them out of circulation because they didn't even have that money? This just raises more questions than it answers, and honestly, the longer this continues, the more worried I am about whether Tether is actually legitimate, whether they actually can back their tokens by anything real. This is just why? Why aren't you letting anyone properly audit your finances? Why don't we have an independent report from a third party that verifies everything you claim you have? If you don't have anything to cover up, there's no reason not to give us this information in a much, much better way than a letter from your bank. That is just ridiculous. Give us something more, Tether. Something more, anything. Continuing on, we very briefly, now almost 25 minutes ago, because this video is already becoming over long again, I'm going to try to hurry up a bit. We briefly talked about BAT rising significantly in value, going from 42 to 30 on CoinMarketCap by market cap, going up, I think it was 15%. There's a specific reason for that. It was added to Coinbase Pro. Now this is not Coinbase itself, this is Coinbase's other exchange. They have the basic one, Coinbase, and then they have Coinbase Pro, and those are separate from each other, though they are related in some ways. They have added it to Coinbase Pro now, which is the latest edition. They added 0x a couple of weeks ago, and that of course launched the price for the BAT token. Now BAT is a project I very much support. I talked about it at length in other videos. I included it in my top 10 cryptocurrencies to buy. I think it's a very exciting project, and it's nice to see it supported by one of the big players in the crypto world, and I hope this will mean even more exchanges supported in the future. Since we're talking about Coinbase, there's this theory here that I'm not sure how much I buy it, but there's this theory that Coinbase's chronicle of events might point to a crypto super rally in the weeks to come. I don't particularly agree with it, but let's just read this quickly and then let's see what they're saying here and why I don't fully agree. New cryptocurrency digital exchanges are cropping up every day, but Coinbase is a standout. It's not like it commands average daily volume like Binance, but the exchange is based in the US, and that's important. Recently, the digital crypto platform said it is a bridge between fiat and crypto, and this is true. Perhaps it is one of the few exchanges in the US which applies a very methodological and prudent approach before listing assets. However, they are opening up as demand spikes from their 20 million users. Still, being one of the pioneers, it commands authority, and we can glean what the future of cryptocurrency, especially Bitcoin, holds just from their action. After all, is there any need to invest in a business or develop infrastructure which is expensive if there are no expectations of profit? And here we get to the whole problem with this. This article is going through a timeline of all the big stuff that Coinbase has been doing, all the money that they've been raising, how they've been expanding, and it's trying to extrapolate that can tell us about the future of the crypto market. But here's how my take at that. All of this is not telling us anything about the future of the crypto markets. It's telling us about what Coinbase thinks the future of the crypto markets is going to be. Coinbase is investing all this money and is expanding significantly because they think the crypto markets in the future are going to grow significantly, and they want to dominate that. This does not necessarily mean that it's going to happen. This means Coinbase thinks that is going to happen. Now, I think the people at Coinbase are probably relatively good at assessing the markets. These are experts. They have a dozen people working there that are absolute experts, that have been in the markets for a long time, that know exactly what's going on. They probably do have some inside information that the rest of us doesn't have as well. but we shouldn't quite go as far as to go from them expanding to assuming that we're seeing a bull market in the coming weeks. That is a bit very extreme. The way I see it, this is just Coinbase thinks crypto is going to take over more and more in the coming years, and they are preparing for that. By expanding, by hiring more people, by opening new offices, by adding new services, they are getting ready for when they think the crypto markets will raise in value. This doesn't mean that it's happening in a couple of weeks. This can't be directly tracked to the growth of the market. This just tells us about what Coinbase thinks, and they clearly think there is an incredible untapped potential in crypto, and that I agree with them. I agree with them fully. I think we are going to see the markets grow significantly in the coming years, but I'm not sure how legitimate I think it is to make any claims about a super rally in the weeks to come. Nothing about this points towards anything happening within the next couple of weeks. All this tells us, and you can go through the article, they're just listing the major news stories from the last couple of months about Coinbase. All this is telling us is that Coinbase is preparing for a bull market in the future, not that anything is going to happen in the coming weeks, and even then only what Coinbase thinks about the markets, not what the markets are actually going to do. Now, I think it's valuable to look at this. It's valuable to keep in mind what large companies are thinking about the future of the crypto market. With Coinbase pushing so much money and expanding so much, they clearly think that a lot is going to happen here. And if investors are willing to put billions into infrastructure for the crypto market, that should make us all hopeful for the future. But I'm not sure how defensible it is to make any claims about a rally in the coming weeks based on this. I mean, it might happen, of course, but that won't be because Coinbase prepared. Anyway, one last story for today, and that is about adoption internationally. The Ukraine is not a country that usually comes up a lot on this channel, but today it does because they are aiming for legalization of crypto and more adoption. We see more and more countries doing this. Some countries are closing their borders to crypto, but a lot of others are opening their borders, and that is always beautiful to see. So let's read this as the last article of the day. In an official statement, the Ukrainian government confirmed its plans to establish regulatory frameworks to legalize crypto in the region. As a part of an initiative to consider and acknowledge cryptocurrency as an emerging technology, the Economic Development and Trade Ministry in the Ukraine released a new state policy to oversee various cryptocurrency-related sectors, which will be put in full effect by the end of 2021. This is another thing that a lot of people often don't think about. People in the crypto world expect things to happen quickly, but as we see here, governments, huge companies, banks, all of those are usually moving relatively slowly. So we shouldn't expect too much to always happen in the coming weeks. A lot of these things will take a couple of years, and these will all impact the markets, but that will usually also take a couple of years then. Don't have some patience. Don't expect everything to happen overnight. Because even a relatively small country, now the Ukraine is not tiny by any standard, but it's not a huge country, it's not a huge economy, and even they will need a good 3 years to put this plan into full effect. So imagine countries that are much bigger, much more complex, that have more hurdles to jump through, that will take even longer. Large companies are almost as complex as countries at this point. All of this takes time. Throughout 2018 and 2019, the government of the Ukraine will integrate regulatory frameworks to strictly govern the local cryptocurrency exchange market. Crypto trading platforms will be required to implement Know Your Customer and anti-money laundering systems to help local authorities monitor the market. By 2020, the government plans to delve into the cryptocurrency mining industry, smart contract protocols, and taxation as the second part of the initiative to recognize cryptocurrencies as an asset class and an established industry. Researcher Denis Zaritsky, I probably mispronounced that, I'm very sorry, stated that the official document released by the government of Ukraine outlined a 5% tax payable by entities and individuals with cryptocurrency holdings, a rate that is substantially lower than other regions like France and the UK that have over 10% tax on crypto investments. 5%, that is actually quite spectacular, and that depending on how well they implement their framework, that might lead a lot of people to hold their crypto holdings in the Ukraine. Regions that have recognized cryptocurrencies as properties impose higher taxes, as Japan and Australia have done in the past. In early 2018, both Japan and Australia removed double taxation on crypto. They aim to determine guidelines for token classification. Additionally, they will be touching upon issues that relate to smart contracts and cryptocurrency mining. Therefore, this work will be ongoing. There will be 2 separate stages to the implementation of this new state policy. The hope is to have this policy in full effect by 2021. In addition to the new state policy, the government notably has brought in a new taxation bill. This outlines a new 5% tax that is payable by entities and individuals with cryptocurrency holdings. In October, Yuri Derevyanko, I probably also mispronounced that, a member of the anti-corruption movement of New Forces and the legislator of the Ukraine, called for the complete elimination of taxes on crypto by the end of 2020. He firmly stated that crypto has the potential to become one of the major markets of the Ukraine and a driving force for the country's economy. I believe we need to impose a moratorium on taxation of the crypto area for the next 10 years. We have to regulate and legalize this segment, which will become an engine for a new economy. And he brings up an important point here. A lot of smaller economies can really take advantage of this new type of money, this new technology, to really bring their countries into the international discussion, to bring a lot of money into their countries, a lot of research, a lot of very smart people. And we see Malta in particular really taking advantage of this. And that's why it's always baffling when small countries, when economically weak countries don't want to support crypto, when they want to make it hard for crypto. They are not seeing all the potential there. Currently, both the opposing and the ruling party of the Ukraine remain positive on the long-term growth of the cryptocurrency sector and blockchain technology. The positive sentiment towards the new asset class in the country could lead to a sped-up process of implementing the policy drafted by the government to legalize cryptocurrencies within the next 3 years. Singapore, South Korea, Japan, Switzerland, the UK and France as of late have shown significant progress in terms of regulation and infrastructure establishment to facilitate increasing demand towards the asset class. While local experts remain optimistic regarding the 3-year plan of the Ukraine, some have expressed concerns in the timeframe of the initiative and that the period of 3 years could allow other emerging cryptocurrency markets to take first-mover advantage. Bottom line here is that the Ukraine is going in absolutely the right direction here. Now, some people are critical about them saying this will take 3 years. Now, keep in mind this is supposed to be a comprehensive environment that takes care of everything to do with crypto. This is supposed to clear up the legal situation, the tax situation, the infrastructure, everything. And that will take time. That includes a lot of smaller laws and stuff that need to be pushed through individual agencies. There is a lot of infrastructure that needs to be built. That will just take a while. But if they take their time with this, they can make sure they do it right. And this is just yet another country moving in the right direction. And with that, I'm going to end one of my longest videos yet. I'm sorry I always drone on for so long, but today we had a lot of stuff to talk about. And I'm very sorry for being such a mess today. I messed up so many times while reading stuff, and I'm always a bit of a mess because English is of course my second language, and I do get a bit nervous talking to so many people online. My channel has grown way faster than I could have ever anticipated, and it does get me a bit anxious and nervous every time I'm recording. So I'm sorry about that, but you just get that with my channel. Anyways, thanks for watching. Make sure to subscribe if you want to get these videos in your subscription box every single day. I don't think I've missed a single day in the last month, so I'm pretty good about this stuff. If you really like my channel, there are ways to support it in the description. Most importantly, a Patreon page where you can pledge $1 or $3 a month to help the channel out, and you get some minor perks for that, so check that out. There are also direct donations, or you could get a Nanoledger S or a Binance membership, where a small part of the profits go to me as well. All the links for that in the description, as well as the links to all these articles and my social media pages. Thank you so much for watching, and I should be with you guys again with another video tomorrow.